I think technology is going to recover, but I don't know that it's going to take the leadership over. I mean, you saw just on that graphic, the declines that we've seen. It's going to take a long time, I think, for those to resume market leadership, and I think it's time for the markets to shift in a little bit of a different direction. We're definitely seeing that over the last few weeks.
Which means what? The markets collapse, or they find new leadership?
No, I think new leadership. With that type of a decline and the leadership that's been in place with technology stocks, it's going to take a little bit for that to turn around. But we have definitely seen a shift towards value and away from growth, and that's really manifested itself in the last few days.
Yeah, Brian, the pessimism is thick and heavy here. Do you think it's going to be the reigning sentiment through the end of this year?
We don't. I think we're getting a lot of the 2019 bad news out of the way in the fourth quarter of 2018, similar to when we started pricing in the good news about 2018 in the fourth quarter of last year. So we're pretty optimistic about the year to come. I think technology will have a chance to bounce back. I think when you see growth come down across the board next year for earnings in the S&P 500, some of those higher growth names may start to stand out. We don't think the growth trade is over by any means, but we are going to be much more disciplined when it comes to quality, not getting defensive at this point, but making sure that we're not looking after names that benefited disproportionately from the tax cut this year, or that are relying on sort of those juice revenues next year.
Disproportionately from the tax cut.
Not tech as much. I mean, it's actually a little bit interesting that tech did so well earlier this year when they were not the sector that would benefit the most from an across-the-board tax cut because their tax rates weren't that high to begin with.
Which means what? You would buy technology here?
High quality tech where we know there's a lot of cash flow, that there's not as much exposure perhaps to overseas markets. Those are the areas that we're starting to look at.
I mean, I'm trying to think through. Apple seems like high tech, high quality, but it does have a lot of exposure to overseas markets.
So in terms of the valuations we're looking at, the stocks that have done the best recently, that are priced to that the most optimistic growth would not be where we're looking for, but we're not trying to bottom feed either.
I feel like everybody's gotten hit. Even some of the enterprise software groups got hit pretty hard yesterday.
Even some of the names in growth that are rotating into the leadership, maybe names in healthcare that are slightly more defensive. Even the consumer looks pretty strong in the U.S., so those consumer names that are leveraged more to the U.S. consumer.
So you don't like technology really either? I'm sorry, I'm a little confused. You do like technology in some names, or there really is not really too many places to hide right now?
Well, it's going to be harder to find opportunities next year. We think overall returns will be lower, but I think if you have names that are going to continue to post decent earnings growth next year, they're not going to have that huge decline like the S&P 500 overall will. They may start standing out next year as opposed to what we've seen this.
Like who? Who are you kind of counting on for that?
So I don't cover individual stocks like a portfolio manager would, but we're the word I keep hearing from our PMs is quality when it comes to selecting names for next year, and there's a fair number of them that are also looking at what are some of the names that are overbought at this point, maybe too much rotation into defensives, not enough credit given to the idea that we're going to continue to grow next year. We don't think we're going to slide down into recession in 2019 or in 2020. So that some of the sell-offs here that we were just kind of marveling at in the last segment, they may be overdone.
Hey, Tom, let's just talk a little bit about retail.
Sure.
I don't know if that's an area you've focused a lot on, but today we are seeing some of the names in retail that are even posting pretty decent sales numbers, pretty decent same-store sales numbers, maybe not quite exactly where the street was expecting, but the consumer looks pretty good. But some of these retail names are getting hit pretty hard because they're investing a lot more in their operations, whether that be more in salaries or more in digital operations.
Yeah, I think that's a key point. It does look like the retailers broadly are doing pretty well, but some of the input costs, it does appear that maybe inflation's creeping in a little bit and affecting some of these results, so you have to be a little bit careful. We do own Target, we do own Lowe's, and so disappointing to see those numbers today and some of the guidance that's coming out. Be interesting to read the calls or listen to the calls, but yeah, I think consumer discretionary is an area that you can be selective in. It's been one of the stronger sectors this year, and we'll be looking through this.
You own Target. Right now that stock is 7%, more than 7% down on this. You think it's because of the guidance they're issuing, just in terms of what they'll be investing and what that will cost the company? Well,
it looked like I was getting mic'd when the Target results came out, so I didn't really see too much about what was happening. But it sounds like some of the input costs are rising, and maybe inflation's starting to creep in, and some of the costs of running their online sales are impacting their results.
So does that make you like the stock less, or when you see it down by more than 7%, would you be tempted to buy more?
I don't like to see the fact that it's costing them quite a bit more to pursue the online activity. So that gives us a little bit of cause for pause on that stock. So we're not going to go in and buy it today, I can tell you that.
Are you going to be a seller?
Probably not. No, I think on a long term we still like that name.
What about Lowe's?
Lowe's we like as well. It's been interesting to watch the multiples of Lowe's and Home Depot. Home Depot has historically had a pretty nice multiple gap over Lowe's that's narrowed, so we're probably in favor of Home Depot right now more than Lowe's.